Greetings and welcome back to The Pride. My name is Muphasa El Matador. They call me the Curious Cat. My job is pretty simple. I help you grow your conviction. Conviction to buy, conviction to sell, conviction to hold. And today we're looking at Apple. If you're new to the channel, smash that like and subscribe button because out here in The Pride, we only invest in trends that are going to last the next decade or more. And today's trend is technology. Apple is at the forefront of consumer hardware and they have a narrow moat. This narrow moat is due to their intangible assets in the brand and the switching cost. Apple has completely dominated the game, taking us from PC to mobile with the iPhone and the iPad, and their dominance is based on their unique ability to combine hardware, software, services, as well as third-party applications to build awesome products that are intuitive and just like awesome tech. You can see it in the Apple Watch, the AirPods, a slew of products that just continue to be a big part of our everyday lives, including things like the Apple iCloud, which is dominant on when it comes to storage, the Apple TV. I personally like the Apple TV and Apple Pay. Apple Pay is pretty unique because last week, it's one of the reasons I'm doing this video today, they announced Apple Pay Later. This is a really, really big deal because in these high inflationary times, you're looking at the company sitting on over 200 million in cash, going after firms like Affirm, Afterpay, and Klarna for the buy now, pay later service. Essentially, if you have any product that you wanted to buy with your Apple Pay, you can now essentially get that over a period of time. And the unique thing about Apple is they're doing all of this in-house. We all know that processors, chips have been a big issue. Apple is bringing that in-house as well. I am a big fan of what Apple is continuing to do with their products. Is a consistent message. You can see back in the day, the iTunes came out before the iPod. Same thing with the health apps before the iWatch. And now they have the CarPlay that's going to be dominating most of the cars that are going to be rolled out. They're partnering with Mercedes-Benz, Nissan, Ford, and a host of others to put the Apple CarPlay in motion. And this is all going to lead up to Titan. Titan is something that we have been like following for a long time. We can't wait for Apple to bring that car to the road. So if we're going to break this down, Apple is going from being an amazing software, hardware, and services company to becoming a bank and potentially an EV company. With all of that said, it's important to note that in high inflationary times, you need companies that can continue to deliver when it comes to the bottom line and top line. Apple is a unique beast because if they continue to innovate and bring things like Titan to the market, there's no stopping them. When you look at the balance sheet, it is pretty unique. I personally am bringing this up today because Warren Buffett can't get enough of Apple. I think is unique because he hardly invests in tech, yet Apple is over 40% of his entire portfolio. If you like to follow the smart money, follow Warren Buffett, right? But there's something else, right? Nancy Pelosi has been known as one of the greatest traders of our time. I have no opinion on this, but I did catch that her husband put the $1.5 million bet on Apple, the $80 strike on the call option expiring May and June of 2023. I thought that was pretty interesting. But when it comes to chip processing, if they bring this in-house, you can see the MacBooks that are coming out in the future bringing higher margins because they now are going to be dependent on their own production instead of companies like Intel or any other outsource for microchips. Microchips are scarce in this current market. If they can pull this off and dominate nonstop when it comes to margins. When it comes to cash, remember, this is all about inflation. Cash is king in this type of environment, and Apple makes over $3,000 every second. I want to make $3,000 every second. There is no other company that can actually do this. So what do they do with all of that cash? They have over 200 billion in cash, and this is more than 7% of all the companies in the S&P 500. And Apple is just one company. What do they do with all of these cash? If they can continue to innovate, continue to dominate, put out amazing products, and push the top line and the bottom line, Apple is a no-brainer investment, especially when you realize that that cash can buy Uber, Twitter, Ford, Sony, Snapchat, if you're into that kind of thing. That's a lot of money, and it can truly put them in a good position. Now, let's look at the bullish argument, right? I believe that Apple, as long as they continue to invest in innovation and bring amazing products like Apple Pay Later, Apple Watch, Apple TV, the AirPods, the Titan, all these things to market, they're going to continue to dominate. The Apple iPhone and the iOS are an amazing product when you put them together in that garden that they are protecting. They will continue to push forward. And if they can dominate the mobile trend for like developing world and continue to push these products to the market and get buy-in, there is no stopping Apple. That is the bullish argument. I like to look at the bears. They have a weak argument. I like to hear them out. When it comes to the bearish argument for Apple, it's important to look at these details because they do make a lot of sense. They do make a lot of sense, and this is a lot to unpack. But I'll do it really quick for you. The first thing on my mind is Apple is at the top of its game, and there's a lot of competition from Samsung to Google to Amazon. They're trying to take that position. Remember, they're in an industry where like consumers are insatiable. If Apple was to bring out products that were inferior to the competition, or they have bugs in their updates, they will continue to be slaughtered by companies like Amazon or anyone else who can bring a value product at a cheaper price. The consumer would jump on that, especially if new tech comes in. Like when it comes to Siri is very weak when it comes to the competition, right? Alexa is dominating this space, and other companies that can build a revolution to tech. And I'm just going to pause on that and say this. At some point, Nokia was the dominant player in the mobile space. Today, completely gone, and that can happen to Apple. With that said, all investments come with risk. No risk, no reward. And after reading the bearish case, it's very easy to see the risk that could be associated with this investment. First thing I'm going to touch on is the fact that the competition can definitely snap at Apple if they don't get their game right. If the innovation stops, it will be a big problem. Another risk to this is they continue to price their products at the premium. And if the competition is able to produce better products at the cheaper price, new tech that Apple is slow on, like virtual reality, if that becomes a big thing and takes away from like the smartphones, or like augmented reality and Apple is behind the trail, these are really big risks to take, and that could completely sway the dominance, just like the example of Nokia and Motorola, which were like top guns and now they're like bygone details. I'm going to be going into the financials and the technicals, but Awesome. I like to jump into this as quick as possible. So as always, I will do the year range first, so you can see that Apple has traded between $125 and $182 in the last 52 weeks. With the current price of $137, we are currently trading close to the bottom of the ocean, and that is the reason that this particular video is very apt for right now. If you look at the 5-year chart, you can see that Apple went from trading at $35 4 or 5 years ago to a current $137. If you have bought 5 years ago, you'd be sitting really pretty right now. And that's the power of investing. A 2.2 trillion market cap is a beast. There are very few companies who ever get to this level. Apple is definitely a winning stock. Our fair market value is $130 with the forward PE ratio of 22. So seeing any PE under 22 is definitely a buying opportunity. I usually go for wide moat companies, but with this particular company, I couldn't help myself. 0.6% dividends. You already know if you pay your boy to hold, your boy's going to hold. Apple is going to be a bank with over 200 billion in cash. The buy now, pay later move is definitely a game changer. I like to look at the annual so you can see how this thing has traded since 2017 to 2021. Exponential growth, even with the pandemic. You can see them pushing over 300 billion in revenue. When you look at the margin of 25%, you already know in the prior 20% gets us exciting. Anything above 20% is definitely a winner. We are definitely excited about a company that can deliver top line 365 and almost 100 billion in net income. Amazing, amazing stuff. Cash and cash equivalents continue to be a big part of this business. Again, very few companies have 200 billion in cash. What are they going to do with it? That is the big thing. Okay, cool. With that said, I'm going to jump in and do a competitor analysis so that we can look at the technicals and see how this thing is trading. So I have Apple, HP, Microsoft, and Google. The best short-term technicals is definitely Apple and HP. Long-term technicals, definitely Apple. And when we do the technical analysis, you see why. Price targets. Apple has a low price target of 145, a high of 205. So if you buy at this range and it hits the low price target, you'll make 5% on your money and almost 50% if it breaks into the $200 range. With everything else, you can see HP is currently trading above the low price targets, but you can see 40% on this particular trade. Microsoft has very high price targets of 320 to 410. So with the price of 252, that's another company that we should definitely be taking a look at. And I believe if you click on the link above, you would see that I already did a video on Apple, on Google, Alphabet. It's very confusing, but they do have price targets as high as $4,000. So you can double your money if this thing falls under $2,000 and you hold it till it hits the price target. With that said, let's look at my favorite thing, the PEG ratio. This factors in growth. Looking at the PEG ratio, you can see one is my favorite. Google or Alphabet is definitely attractive with the 1.10. Microsoft has a 2.44. So there is a lot to consider when looking at this company moving forward, how much growth is in their future. HP 3.33. Not exciting at all. And with the price coming down, you can see Apple trading close to our PEG ratio, the one that we like. Anything close to 1, definitely a buy. You can see strong buy ratings from analysts. EPS 6.15, definitely something to look at when you compare that to HP. Not even nothing to consider. 9.58 with Microsoft and a whopping 110 with Alphabet. The EPS compared with the PEG ratio, Alphabet is definitely something to look at. I also like Apple with PE ratio of 22. Forward PE ratio of 22 is what we use to calculate our fair market value. With everything else that we looked in, and we're looking at $130. So once it comes into range, I like it at 137 or below, but that's just me. This is not financial advice. PE ratio of 5 on HP, not so bad. 26 and 20 with the competition. So you can see the most attractive deals when it comes to this particular space, definitely Apple and Alphabet. I already did a video on Alphabet. You can check that on our long-term plays playlist. Dividend yield of 0.67. I would like a higher dividend, but they do have buybacks that they continue to offer. 3% with HP, good reason to buy. 0.98 with MSFT, no dividends with Alphabet. So that sucks. With that said, let's look at the technicals. Technicals, it's like art to me. First, I'm going to show you the RSI. The RSI shows when a stock is overbought or oversold. Anything above this band, the 70 band, is overbought territory. You would like to sell at that point, and oversold is around 30 or below. You would like to buy at that point. Now, Apple rarely gets to the 30 level, but we can see that 16th of May, it was there, and we are back there with the current sell-off due to high inflation and not knowing what the Fed is going to do. So we might still drop some more, but when they panic, we pounce. This is always a good time to buy. And just for perspective, I'm going to show you on the RSI, when was the last time we traded under the 40% level. And you can see right here, this was the pandemic. And if you look at the chart, you can see it traded below the 21 EMA, the 50 EMA. And if you had bought during this panic at $53, even today, you would be up 100%, trading at 137 bucks. Since that panic, Apple has traded nicely back with the 21 EMA, bouncing off, coming close and finding support at $116 and resistance from 145 and above. Still trading with the 21 EMA through 2021, bouncing off the 21 EMA, bouncing off the 21 EMA, trading in an upward momentum. And currently we are back in that panic mode where we are breaking under the 21, under the 50. RSI is under 40. So these are buy signals. And I saw a bounce in May off of support. That's an ice line. An ice line is where support and resistance are on the same line at the 132. Currently trading at the 137 and heading back to that ice line. I drew my trend line and we're seeing a convergence right here. It's continuing to get rejected on this resistance line. But I believe that every time there's a convergence, it shows that a trend reversal is coming. So looking at next week to see how this thing trades, it would either be a big opportunity if the trend reverses, or a big opportunity to buy if the trend continues to be bearish, and just load up on the stock if you have the conviction. Now, that was the weekly chart. And I'm going to show you guys the daily. Always remember that if you want to see how we're trading this, options, long plays, when we buy, you just need to join the Pride. It's really simple. Hit the Patreon link and come join an awesome family of traders. We do the simple things consistently. We're filled with traders, investors, analysts, researchers, the whole 9 yards. We would definitely love to have you. If you like content like this, hit the like and subscribe button so you get notified every time a video drops. We only invest in trends that are going to last the next decade or more, and we love to trade momentum. So with that said, you can look on the daily chart and you can see that the bearish momentum has carried on since the rally in April got like completely smashed. But it's important to note that from that rally on the daily chart, you can see if you had bought during that panic in March at 150, you would have made solid money when it hit resistance. And that same opportunity presents itself if you trade the right levels. With that said, it's Muphasa El Matador. I hope I've been able to give you the conviction to buy, hold, or sell. Until next time, peace.